Okay. My name is Nesbet, and actually representing Singapore Club today. And thank you everyone for joining. Yes, and today we are going to analyze and talk about an update as well the page that we did. So without wasting time, let's go straight to the point. So I remember we did gold, and then on gold last week we spoke about it being on the retest zone, of which we saw that okay, gold came in the retesting zone. If you remember, we are following this. I don't know what is this. Okay, this is price. Yeah, we're in the range. So how did we do it? We measured from that point to that point, right? Okay. This was our gold. So we are currently in the zone. So usually what they do is 1, 2, 3, 4. They might drop one more time in this area. They might drop one more time here for leg 5, and then we go up, or they might go up right now. So we shall see what they're going to do. So that's good for us. And then let's go to dollar index. So with dollar index as well, we said that, sorry, remember from the previous webinar, we also spoke about this movement from here. Now we are going into wave 4. So we've got A, and now we're constructing B. And we also measured, we saw that, okay, the market came in this area. Okay, and then we expected this one where they are right now. So now they broke out this channel. So expecting one more drop to down there. So this is our target here. Somewhere around there, that's where our target is. So we are still looking forward for more sales. We're looking forward for more sales on this one as well. Okay. And okay. And we go to NASDAQ. So I'm just gonna run the updates so that you can see exactly what I posted yesterday. Nothing has changed yet. It's just that the market. So yesterday we are saying we're in this zone. So I always say the safest buy, it's when the market breaks out this channel. It's when they break out here, this channel. So our target is this one. This is our first target since we're still inside the channel. So we are also looking for more buys here. Okay. And then we did GBP USD. Also with GBP USD, we spoke about this. You are in the wave 4 zone. As for yesterday, I expected these guys to move in this, expecting this and that, thinking this was the breakout, but they failed. They came again for another leg, of which is correct, which now they said 1, 2, 3, 4, and then 5. As you can see here, let's go to a lower time frame. So now our leg is like this now. Let me go on 1 hour and explain more on this one. So as you can see on 1 hour, what I meant is 1, 2, and then this, all of it was 3. So they said 1, 2, 3, 4, 5 for these 3. So it becomes 1, 2, 3. Let me actually label it so that you can see exactly what I'm talking about. So we have X, we have 1, 2, and then we have 3, and then we have 4, and we came for 5 there. Okay, like this. By doing that, they gave us our way 4. So it's a triangle formation. Okay, there we go. Okay, like so from B to C, leg C, it was also formed in its own wave. So it was X, yeah, and then it was A, B, and then C, D, and then E to give us this. Let's put it wide. This is what I meant. Okay, so this is how this correction was formed. So I am saying so this is three with A, B, C, D, E. So the safest buy is break above this level. So it's a game of being patient only. Break above this level. So in breaking above this level, what are they doing? So guys, don't expect me to analyze different plays every day. I can analyze the same plays every day, updating them every week whenever we have, as long as we're gonna follow them, those plays they'll make us a lot of money. So I'm saying to you the safest buy because currently there's this resistance. As you can see, I call it a trend line resistance. I remember I told you also my strategy works with this trend line, the 100 and the 50. If you see the bounce, the fake breakout, and then the engulfer came back. So when they break above this time, this was an attempt and failed. So this time we're expecting an attempt and break above this level. We are flying to this target. This was our target for NFP, but it failed to go. So they have to complete this movement, this leg. So this time around, so you can buy above this area. So I'm expecting either this week, especially today, or mostly this week, it will gonna confirm us. But otherwise, if they fail to do that, we expect they will come for another level. But for the time being, we're still holding this level. Why are we still holding this level? Remember, like I said before, we are now at this position of we have 1, 2, 3, and then 4. So the other thing is like they came to test. So remember the law, it says that the law says that it must not break the high of wave 1. So wave 4 never broke the high of wave 1. So we're still respecting that level. So by doing that, we are still okay. So as you can see also on H4, it shows what break above this area. So it's a strong resistance zone, this one. That's why I'm saying we rather buy on the break above. Okay. And then we go to EU. EU is the same thing because I remember last week we say that they had to close in this area because this one, it was a channeling up, 1, 2, 3, 4, 5 up, and then they came down for 2. So in that doing 2, also they did 1, 2, 3, 4, and then they did a truncated 5. So we can also see it on H1. I'm going to remove this guy so that we can start again. So on H1, it's something like this. Let me try so that I can show this part. Okay. So we have this on H1. So what are we saying? Now we are saying that after it completed these 2, now we are constructing 3, right? But in our construction of 3, this was our what? This was our 1, 2, and then 3, 4, 5. Remember, this is what? This is a channel. Actually, sorry. It was supposed to come inside here like this because it's from here to there. Then from there was a breakout and the retest here. Okay. So it's 1, 2, 3, 4, 5. Then a breakout. Then we've got A, B, and then we've got our C, and then we've got D, and then our E. So we're expecting now the market what to go. But and also the other thing that we also have to check in which level is this market. Okay, so as you can see, this market is actually in the 78.6%, which is actually correct. So the worst thing that can happen is because this is a strong correction, it's either they will have one more impulse, which is going to be a spike, and then we go. So one up or break above, we're buying. So we no longer need this. We're just going to remove it for the sake of tightness. So we are going to do this. This is what we need currently. So we can see we have a breakout there. So like I said, the worst that can happen from this area, the worst that can happen from this area is these guys to come here and then in coming there, then they want to move up. But otherwise, if we were to buy this, we buy it on the break above. Now we'll be taking this point. and that point there, these 2 points. So if you were to buy also this one, we buy above here. So anything break above here, we're buying it. So this is what we're expecting this market can either do. Okay. Okay. Okay, and then we also, today I want us to talk about AUDUSD. So I'm just gonna remove all drawings. So any questions from what we did so far? Any questions? So if you've got questions, you can type and then I'll respond to those questions. Okay. So with these on a monthly time frame, we can see that the market, it has been going down. Okay, and then there's a change of direction here. So we can observe that the trend was going down from this point to that point, right? There's a downtrend here. Okay, can you see that? And also we had a leg from that point to that. So let's talk about this history. Why was there a change of direction, so that you can understand next time how do you recognize this change of direction? Okay. So before we go further, let's notice this as our what? As our strong support. This is our monthly support or yearly support, you can call it. So this is the strongest support zone that we ever had here. Okay. So what happened here now? Why there was change of direction? Remember, I always tell you that we notice what? This RSI is the same as what? As the line graph, right? So this point, if you have to check, because if you check what is happening here, is the same which is happening there, right? It's a relative strength index. So which means it relates price. So if you have to check from there, but from here, which is here, to this point, this market was coming down, right? Yeah, it was coming down. But if you have to notice from this side, from there to there, this market was what? It was going up to there. It was actually going up. Can you see that? So in that, it becomes divergence. Number one, this is the first side. And then number two, there was a breakout. Then in that breakout, this part, whenever there's a cross, remember I always tell you, whenever these indicators, the cross, each other is a strong buy. But when are we going to buy it? We're going to buy it by confirming what? Confirming this breakout. I'm just going to do this so that we can see the candlestick profile. Okay, so from there, if you had to check, there was boom, breakout. So when do we usually buy? We usually buy on what? On the retest. Okay, so if you check our retest, it came in the zone. So in it coming in the zone, then this becomes what? This becomes our new wave, our new cycle. Can you see this is an impulse? It's respecting its highs and lows. Okay, so now we have a new cycle now. We start labeling because we've already confirmed this. So from there to there, we've got our 0 there, and then we've got our 1, and then we've got our 2, 3, 4, 5. We'll talk about this one later. But let's change the color. Let's use yellow. Right. Okay. Okay. So this is what we have currently. We have observed this one. Okay. Let's delete. Right. By doing that, now let's see what happened here. The market, it went up in an impulsive manner, which is okay, but then it came back in a corrective zone. Okay. But remember, back in your mind, we have this zone from there. That's our first line, right? Remember, we have this zone. So in having this zone, this become what? Our area of concern. So let's forget about this one. Let's focus on this one. This becomes our area of concern. Sorry. Okay, let me change the color of this one because we need that one. Let me put it like that. And then like that. Okay. And then this becomes the zone. Okay, so let's remove the RS. So this was a failed impulse because if it was going to retrace, it was supposed to end here to give us what? Another wave two. Because this is an impulse going up, it's fine. But this, okay, it came in the zone, it failed because it went below the 100%. So it invalidated this becoming an impulse. So now, which means there's what? Is it wave two? It's continuing. It's not yet ended. So now we have this zone. So we're gonna take it from there, right? Okay. So now we have this zone. That becomes our wave two zone. So we have now a ranging box, like where the market currently is trading. We have this range now. This becomes our range. So it means that this is no longer two only. Two, it might have ended this side. So what are we saying? We're going to do our two. So this becomes our A of two. This becomes B. And then this becomes, hey, this is very interesting. This becomes what? This becomes a C. So in that, I want you to notice something. Like I always say, there are types of waves that, and corrective waves that we are given by the principles of Elliott waves. So you have to try and figure out like which type is it that you are given. Do you get my point? So in this case, if you are to check this one, this is mostly type of what? Of a, like we can say, okay, this is an impulse. It can become a 5 because it's a motive 5, 3, 5. And this is correcting in a 5 manner. You see that? So it becomes a 5, 3, 5. Okay. So in it becoming a 5, 3, 5, it now becomes a zigzag. So how do you label zigzag? So a zigzag, it can be a double or triple. So in this case, let's consider this one is a double. So we have X, and then we've got our W, first zigzag, the 5, then 1, 2, 3, we have the 3, and then we have another 5. So we have 1, 2, 3, 4, 5. Can you see that? To give us this. So in this wave, it's called a 5, 3, 5. That becomes a 5, 3, 5. So this becomes my Y leg. Okay. So now in giving my Y, that was my wave 2, how it was formed. So bear in mind that this is the spike, and this it came in the what we call the stop hand zone. So it's very correct this wave. It came in the stop hand zone. I want you to show you something. Guys, this is mentorship that I'm doing. And I usually, people they pay for this information. Check. It came in the stop hand zone. Did some stop losses and then they went out. Okay. So the main thing that you have to do in understanding this is to identify the type of waves and correction being formed by what? By the market. If you can identify that, how do you identify that? By understanding the principles. So in this case now, we are now dealing with this. We're dealing with this from this point to that point. Can you see that? This is what we're dealing with now. Okay? We're not dealing with this channel. From that point to that point. Can you see that? Okay. So like we said, this is one. If you are to go in a lower time frame, this is one, and then there's A, B, C. Then market broke out. So we also have a smaller channel here from there to there. from there to there. Okay, that's our first correction. So this becomes 1, 2, and then we've got another 1, 2, 3. So in this 1, 2, 3, we've got a solid movement, which is a 5, and then we have 1, 2, 3, which is a 3, and then we have another solid, which is a 5. So we have a 5, 3, 5 again for this leg. Can you see that? So this becomes our 3. And then after getting our 3, we have a correction again here for our 4. Okay, and then after correction for our 4, we have impulse down for our 5. So in that, we have an ABC correction. So we have got X, we have A, B, C, D, and then we've got our E there. After getting our E, we get our Y, and then we get our what? Our possible 2 if the market is going to what? Sorry, if the market is going to consider this as a double zigzag. But we will find out now if it's going to be a double zigzag. If there's a strong potential of being a double zigzag, we'll figure out now. So this is how we analyze the Fed. So these ones, they're the future. We'll see them later after we break above this. So we have got 1, and then this, yes, it's true. It can pass here. So what type of a flat is this? That's what you have to understand. I mean, what type of a zigzag is this? So we have it. I said it's a what? It's a double zigzag, and it's very true. Sometimes this leg can surpass the high of what? Of wave 1. But in this scenario also, it has to be a flat, an irregular flat for it to do that. So now we use that elimination. We check was it's more visible here, but here we know there's 5. In this, there's a motive. And then this was our strong what? Impulse. So remember, we are coming from a breakout of this previous channel there, and then now we're dealing with this part. So now we've got XW and then Y, and then now we have another breakout again here. So, and then the market, remember before it retested in what? In 61.8% zone, right? Okay, let's go to weekly now. So, like I always say, the market always do what we call the similarity. It always moves similar to the previous one, the previous movement. So there's a similarity. So don't forget, previously our wave 2 it retested in one in the 78.6 zone. Okay. Okay, great. So now we come again. We have the same impulsive leg, and then we have a correction here. So in the so from there now, first of all, we measure. Sorry, we just wanted to lift it up a bit. Let me just unlock it. Okay. So we want to measure here, right? So we have another leg from that point to that point. Okay. So now we are no longer considering this. We're taking this zone because this is the lowest part that we're now. So this becomes the zone. So as you can see now, the same thing is happening. The market came actually in that zone. So in this area, that's when we're expecting what? A retracement is what it did here. Oh, is that point far, far, far? Is what it did here. If you still remember, yeah. Okay. Any questions so far? Because I don't want to rush if people are not understanding the study. Okay, we don't have a question. So the other thing that you have to notice, it is said that with this AE equals to C. That's the law that whoever discovered the harmonic pattern uses. So what does it mean? It's a correction. So from this point to that point, that's our first leg of the correction. Eh? So this is our A, and then this is our B. So meaning to say A is equals to C. They meant this. So it's a proportionality ratio. It's not just like it has to be exactly. So in that, the proportional was to come in the 61.8%, of which we know all of us. So this was a very strong trap because most of us were going to buy in this area. and then we get what? We get swapped out. But this is what? This is the formation. So currently now what we're doing is we have already what? Confirmed the A equals to what? The A equals to C leg. So what are we doing? We are just waiting for what? We are just waiting for the market now to show us price action is all going down. Okay. So now we have got, let's label our A. Okay, remember like what you said, this is 2. Now we're constructing 3. So we are also constructing 3. It also includes what? 5 waves in it. So this is the first wave of what? Of wave 3 of what? First wave, wave 1 of wave 3. And then 1 to wave 2. And then also 1, 3, 4, 5. But let's change the color because this is not the bigger one. Or we can change the, let's change, but I always like to use the, I don't like this bigger one, I like the small one, but I like changing colors. Let's do the colors, okay? Let's go to, which one is more clear? White, okay? White, fine. So we've got 1. So this one is 1 of 3, and then this is 2 of 3. So we were expecting to trade what? 3 of 3. In that, remember, we saw that there is this channel here, this one. And then we also observed this one, right? And then there was a breakout, that correction. And then we observed this one now, from there to there, right? Okay, but currently now, we are dealing with this one, this leg, but we have this high. So in this leg, we have from that point, we had from that point to that point. And I say to you, a lot of people, they were trapped in this area, and then the market decided to break one more leg down. Okay, we'll find out why did it do that later. So, but this is a strong zone that we have to consider. Okay, so for the sake of tightness, let me just remove this, and then let's give this name. You can also name it a WXY. So we've got to there, and then to the. Let's change the color to white as well, so that it can be uniform. Okay, so this is what we're expecting in this zone. Okay. Fine. And now we go down again to daily now on daily. So this is where we are currently now. We are trading this. So in trading this now, let's remove this. We no longer need it. Did we mark the level? No, we didn't. Let me try to mark this zone first. Okay, so it's from something like this. Right. Yeah. Okay. So we have this new zone. So this one we're gonna use the left with 10 minutes. Okay. But I try to be a little bit faster, right? Yeah. Okay, let's remove these ones. Let's no longer deal with these ones since we already know these ones. So that there'll be so many trend lines here. Let's deal with it one by one. So we have this one. Okay, great. Right. Any questions? If you've got questions, please, you can so long type the questions. I'll come to you. So we no longer need this guy. He gave us this one already. Okay, this is what we're dealing with currently. So from there, we realize that we have got A, B, C to give us A, right? And then if B there. So let's name it. We said this is an ABC, so we've got X, A, B, C, right? To give us this what? To give us this A, B, and then we need C down there. So let's change it to white. Okay, so this is what is happening here. Okay, so here we've got our A. Now we're doing our B. So remember, like what I said before, I said there's a rule we say what? A equals to what? A is equals to C. So this is our A. And then now we want our C. We take it from that point to that point. So meaning to say that we are expecting until in this area where we are right now. So that's why we have this drop, which is still continue to be in this area for our A equals to C. So this way exactly we're expecting this market to be. So we're expecting it in this zone. We are in the zone of it. Okay. All right. So what do we do on daily? So on daily, you can see that this market is still going down. But in that, check, the market gave us this leg. And then there was a sign of what? Of an engulfment. And then a lot of people were trapped here with buy. And then they sold again. But if this so, this sell, I actually spoke it with one of my friends. I'm like, okay, here we were like, it shows some signs, but then with this formation, they were failing to break here. And then I saw this one last pull down because of this one last leg down. So you see these EMAs, they work, they're very strong, like this one more pull, and then they came to complete it. So they became A, B, C, D, E, and then one more drop down. So in this dropping, they, like I said today also with these guys, they might also what? Drop one more time and then go up, but they are in the zone. So it's a game of waiting. So now we are waiting for this confirmation because with this, it was supposed to go, but then there's sort of an engulfer. But in that, so how do you trade this? You trade this by what? You put your what? Your support zone. So what are we saying? We are saying if they are to break this level, they're gonna go further down for that one more drop. But if they are to hold this level, they are going what? They're going up, and then we buy. So we go to H1, and then we wait on H1. So we are waiting here. This is our waiting time frame. But as you can see, it's a strong, still a strong sell because there's a potential that this market is failing what? It's still failing to break. Okay, we're left with 5 minutes. Any questions about this? This is how we analyze our market. So I'm going to unmute everyone. Those who have got questions, you can ask now. We're left with 5 minutes. So we can unmute ourselves. It's okay. Let's unmute ourselves and then let's ask questions. Let's discuss. Okay, any questions? Ladies and gentlemen, any questions? Okay, it seems like we don't have questions, but anyone with a question, it's open. You can ask, and then we can answer you.
Okay. Can you hear me?
Yes, I can hear you.
Okay. So you're saying I can understand when you say if it breaks down, it is gonna be a sell. Then how do you confirm a buy if it's gonna go up?
So, like I said to you, this is a strong. Currently, this is the support zone, which is going to determine everything. If they break below here and then close below this area, they're going to push one more down. But if they fail to break it, they are going up. But how do you confirm this up? Because if you go on a smaller time frame again, let's say maybe the 30 minutes. If you go here, If you are to check, they are forming something like a double bottom here. Can you see that? This leg and this, although it came a little bit deeper. Okay. I want to show you a secret on each one. So a secret can be this now, that remember this impulse is coming from this spot. But with this becoming a double bottom, this is our support here. I mean, this is our resistance here. So like I said earlier, it's a game of patience. So how do you buy? You buy above here. Don't buy in this range. So when they close above here, you buy. Yes. So they actually forming something like this. This is what, okay. This can be a butterfly from this point to that point, then to that point, then to that point. So okay, let's just put it somewhere here. A point. Then they'll come again for that point. So meaning to say this becomes your what? Your strong support, your strong resistance. And also you can see with the trend line, they're still what? Pointing down. So if you want to be profitable in this, buy above this area. Don't buy in this range. It's too risky here. You can buy it, yes, and you can win, but the chances are like a 50-50. Rather than in this area, it's like 80 to 80-20. So meaning to say the chances of it happening is 80%, and then the chances of it not happening is 20%. So I don't like to take trades which are 50-50. But the good part is it's confirming, like there's a strong confirmation here. So there's a lot, like if you have to check from that point to that point, to me, that's what I call divergence. Remember, like I said, here it's coming down, but here it's going up. So there's a strong potential of buy, but rather buy it when it closes above here, so that now you have your stop loss area, and then your risk become lesser. Because if you buy it here, where's your stop loss? You don't know. So if you buy here, above here, your stop loss becomes this low, and then your risk ratio becomes much easier and much better. Anyway, we're left with 1 minute. So those who have got questions, please text me on WhatsApp or Telegram, and then we will continue discussing. But I really hope and you enjoyed this session. Okay, there's a question? Yes, please.
Yes, yes, thank you so much for the breakdown.
Okay.
I actually loved the way you have broken this thing down. But then still on this same market, I was having a question, because the zone you say that it is a risky zone, but when I look at it, there's where it broke. There was change of structure somehow from the downtrend there.
Okay, can you please send it to me on WhatsApp, because I don't have time anymore. I'm left with seconds actually.
All right.
Okay, send it to me on WhatsApp, and let's continue. Anyone with questions or any contribution, let's continue the discussion on WhatsApp. Otherwise, see you on Friday, ladies and gentlemen. Thank you for joining. Bye.